Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you, and this is going to be our weekly portfolio update. We did add $1,108 into the portfolio. We'll also cover any dividends or options we were in for the week. And before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below. If you find any value in the content, make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever we put out any new content. And for those of you who are able, there is the thanks button down below if you want to buy me a cup of coffee. And again, special thank you to the subscribers out there. You guys are awesome, and the channel does continue to grow because of people like you. So if you're a dividend growth investor who has not done so already, go ahead and hit that subscribe button down below. Now, no options to speak of for the week. We threw several out there. BABA again. I was actually contemplating J&J. It's starting to pull back, so I might look at that one coming up this week. We threw out Pfizer, a couple ones on that, and several others, but nothing hit. So nothing to speak of there, so let's keep rolling. We did have some dividends that came in. On the 2nd, we received, well, let's just go over the total first. $166.13 came in on the 2nd total, and that was split up between Kroger, ticker KR. This is out of the consumer staple sector. Paid us $32.56, and we do have the drip set. So anytime a position in the portfolio pays out dividends, those funds go right back in and pick up more shares. So we did pick up 0.54596 more shares of Kroger. And the other portion of that 166.13 was Pfizer, ticker PFE, out of the healthcare sector, paid us $133.57, and that $133.57 picked up 5.17032 more shares. These new shares added an additional $9.37 in passive income over the next year. That's what these shares would pay out. And that right there, my friends, is the dividend snowball in effect. When you hear that term or you hear compounded interest, that's what people are talking about. So we already owned shares of Kroger and Pfizer. They paid us dividends. Those dividends went back in and bought more shares. Those new shares add additional passive income, and that snowball keeps growing, even if we don't add additional capital in these positions. Now, as we add additional capital, it'll make that snowball grow even faster. And the hill that snowball is running down is time. So I like to say, let time work for you. It's going to pass anyway. So let time do its thing, compound interest over time, and eventually you will be able to walk away from your day job and live off the dividends. It will happen. Now, we also received $209.32 on December 3rd, and that was broken up between American Waterworks, ticker AWK, out of the utility sector. They paid us $78.90. Again, we have the drip set, so that $78.90 went back in and picked up 0.57854 more shares of American Waterworks. And the other was Enbridge, ticker ENB, out of the energy sector. Paid us $130.42, and that went right back in and picked up 2.98724 more shares of Enbridge. And these new shares paid for by the dividends added an additional $9.57 in passive income over the next calendar year. Now, our first new purchase here, new capital into the portfolio, $929.29 in total on December the 2nd. We went in, and if you watched the video last week, I was short my SCHD for last week and my VTI, so I went in first thing on Monday like I said I would. I actually had this set up from last week and picked up 6 shares of SCHD, ticker SCHD. This is Schwab Strategic Growth Dividend ETF here. Picked up those shares at $29.26 per share. And the other one, I'll skip the middle one and go down to our other weekly ETF because we did pick up 2 shares of Vanguard's Total Stock Market ETF, ticker VTI, $300.03 per share on that one. And then the other that we picked up with the $929.29 here was Lamb Research Corporation. We're going to continue to nibble on this one. I think we're around 124 shares now. I wouldn't mind getting this to 180, 190. So we'll do 2 shares, 4 shares a week here over the next month or two if it stays down around my cost basis or below. I think it's kind of bouncing between my cost basis and $74-ish. But we picked up those 2 shares of LRCX out of the information technology sector at $76.84. Passive income added from these new shares, $15.19 over the next calendar year. And we went back in on the 3rd and added an additional $178.96. With those funds, we picked up 4 shares of Valet, ticker VALE, at $9.69. I think this ended the week at around $9.30 something. So we're going to continue to nibble here as well, bring down my cost basis, bring up my future potential returns, and continue to grow that dividend. HVT, Haverty Furniture Companies was the other one we added to. 6 more shares there at $23.37. I think same thing here. This one at the end of the week was a little lower than when we picked it up. I think it dropped into the 22, but we're going to continue to nibble on this one. This is one of the companies we had on our stocks to buy for December list, so we're going to continue to do that. Passive income added from these new shares, $7.68. Total invested for the week, $1,108.25. Total passive income added, $41.81. That was with the new capital as well as the dividends that were paid out and the new shares the dividends picked up. All right, sector weight, we're going to run through that real quick. Communications sits at 10.72% of the portfolio. Consumer discretionary at 4.63%. Consumer staples sitting at 9.62%. Energy makes up 6.25% of the portfolio. Financials at 2.92%. Healthcare, second largest slice of the pie at 12.3%. Industrials at 6.68%. Technology is the largest piece of the pie at 13.84%. Materials makes up 7.76%. LyondellBasell is one that I'm looking at right now. Might nibble on that one a little bit. It's dropped back as well. Utilities makes up 8.29%. REITs and real estate at 8.29% as well. They match up. That's funny there. That doesn't typically happen, but there it is. And ETFs eventually will be the largest slice of the pie. I think are they in 4th place right now, right? 1st, 2nd, looks like the 9% would be 3rd. Yep. In 4th place there, but eventually they'll overtake the rest just by the nature of adding to them every week. 9.06% for ETFs. Over here on the right, same sector weight breakdowns here, the percentages that match the pie, as well as the dollar amount allocated to each sector. And here it is, and I show this every week, and I want to be as fully transparent as possible so that you can see a real portfolio built out over time. I think it's important if people are talking about finances, they show you what they're actually doing, or else it's all just talk. It also helps some of the newer investors out there who maybe are not seeing the type of returns they want to, or maybe a position they bought goes down. That happens, right? You can see I have positions in the red. Stocks go up and down. They have a 52-week high and a 52-week low, and at any time or even multiple times throughout the year, they can set a new 52-week low, a new 52-week high, or bounce off that 52-week low and that 52-week high, or anywhere in the middle. That's just the nature of the stock market for any number of reasons as well. You know, bad economic data that comes out, jobs reports, earnings reports could affect stock prices. Negative news, definitely if they miss their top and bottom lines whenever they're doing the reporting, that typically tends to impact them as well. Could be something, a black swan event, like they call them, you know, where oil prices spike because of a storm or something if you're in the energy sector. All kinds of reasons for stocks to go up and down. But if you've done the research and you know the companies you bought are good companies, you've set a good price for them, and you bought them around that price, whenever you see that red, if it was a good price to begin with and you're seeing a bunch of red, so long as the fundamentals of the company haven't changed, you should be adding more. When you see that red, I see buying opportunities. At least I do. CVS, I'll probably nibble on that a little bit. It's down 16%. Actually, J&J is getting close, right? 0.55%. I wouldn't mind nibbling on that one if it drops below my cost basis. Might even nibble on it while it's close. I just saw Union Pacific drop back a lot. Even though it would be up 16%, I wouldn't mind nibbling there. Pfizer down significantly. There I want to add Nutrien and Kraft Heinz are two, as well as HVT are the 3 that I was going to focus on for the month. But as you can see, there's other ones that are down. LRCX, like I said, I'd like to add a little bit there. LyondellBasell is down a lot. That's a very high dividend yield, 7%. Now I need to go in and look at LyondellBasell. Maybe we'll do a video on it on the Stock Pick of the Day series. But let's continue this one and wrap it up. My point is I want to show this that some of you that are starting out can see that there are ups and downs in the market. Don't freak out and sell. That is if you've done your research and you know what you're doing, right? If you're just jumping in the market throwing money at stocks, then maybe you're in trouble. But again, if you've done your research, you know they're good companies, then whenever you see that red, you should be buying. And if you don't want to do that type of research, stick to the S&P 500 ETF or index fund that tracks it. That's what Warren Buffett would recommend. I do VTI and SCHD, right? There's two that you could look at. VTI is the total stock market. I choose that one over VU because VU doesn't have the small caps. It's just the 500 VU or SPY or another ETF or index fund that tracks the S&P 500. They only have the top 500 companies, so they wouldn't include the small caps or some of the mid caps in them. And that's why I do VTI. It's just the entire United States stock market, all the companies that are traded, right? I think as long as there's an America, there'll be a VTI, and I'm sure as long as there's an America, there'll be a VU, which is probably why Warren Buffett recommends it. But anyways, as you can see here, the ticker for each company, total shares on all the numbers will be as of the close of business on Friday. Current price as of the close of business on Friday. My market value, average cost per share, that's my average cost per share. My purchase price, this does include reinvested dividends. Total return, whether I'm up or down, you'll see it. Again, I want to show you so you can understand there's fluctuations in stock prices and your portfolio overall. Percent return, again, the red means I'm down, green means I'm up. Sector, they fall in. With a quarterly, monthly, semi-annual payer. And I need to go and start deleting some of these. Actually, Enbridge just paid, raised their dividend again, so that would be really impacting next year's dividend, the March dividend. So the next video, I'll probably put these back to white, and then we'll enter into 2025 and show, as they raise their dividends. I'll keep Enbridge yellow probably because they just raised their dividend, and that will impact the March payout. All right, where were we? Current yield on cost in this column, portfolio weighting here. So what we saw on the previous slide was the sector weightings. This is each individual position, and I do have a bit of a rule in the portfolio. I don't want any one position to be more than 10 to 15% of the portfolio, and I don't want any one sector to be more than 20 to 25%. That will not apply to ETFs. Like I said, eventually it probably will be the majority of the portfolio. Now, I probably won't ever let it get to maybe 60, 70, 80% of the portfolio, but it might get to 30, 40, something like that. Estimated annual income here, payout months here, dividend growth year over year. This will change as they adjust their dividends. Actually, did I do that with BABA? I didn't, or Enbridge, I didn't do that with Enbridge. See, so Enbridge, I think their dividend growth was around 3% this time, so I need to adjust that, and that will change this number, right? So as they adjust their dividend payouts, I'll adjust this column as well. And where it sits at 15% of a 52-week low, I adjusted this one. You'll notice some of these positions, like LyondellBasell, like we talked about, it's well below what I could invest in at 92.71. So I want to look at some of these now that I've readjusted this. 164 for J&J, that one went up a little bit, but this one will adjust as well. So total shares, 6,298.476 shares. Market value of the portfolio, $319,218.17. What I have into the portfolio out of my own pocket plus dividends, $291,630.44. I am up $27,587.73. This is not what I focus on. It's nice to see that I'm up 9.46%. But when I was up 14, almost 15% just a couple weeks ago, I said the same thing. It's not what I focus on, and it fluctuates. As you can see, back down to 9%. I've been in the negative at times. It happens. Current yield 3.823%. My yield on cost 4.185%. That's why I'm focused on these positions that are in the negative to help try to bring this up a little bit as well. And estimated annual income. This is what I focus on. That's why it's circled in red. The dividends paid out from all the positions in the portfolio, and it continues to go up as I add new capital, as the positions in the portfolio increase their dividends over time, as they pay out dividends, and those dividends buy more shares. And it currently sits at a new record, and it should be a new record almost every week, or every week really. Currently sits at $12,205.23. I don't think we'll pass over 13,000 by the end of the year, though it's going to be close. Maybe, but I don't doubt it, or I do doubt that we'll get there. Maybe 12.5 is probably about as close as we're going to get. Maybe 12.6 is what I'm thinking. So what do we got? 3 weeks left. So we're definitely not going to bust over 13,000, I don't think. But it is still nice to see the growth of the dividends overall, and that is starting to be a significant payout every month. Dividend growth year over year at 6.24%. Again, I'll adjust these as they do. I'll go back in probably after this video and update Enbridge. I did get their dividend payout adjusted, but I did not adjust their dividend growth in this column. I think it was 3%. All right, well, that is really it for this one. And there's a new picture of the backyard here from I think that was from Thursday or Wednesday of this past week. We did get a little bit of snow, nothing significant. I think my parents got like 3 inches. They're a little bit further north. I'm north of Detroit, about 35 minutes. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And again, hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, well, what's remaining of it, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing in journal, educational, and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.